This week, the market has been trading one headline. Will the United States and Iran finally reach a deal? Or are we heading back toward escalation? And that single question has been driving oil, gold, the US dollar, and global stock markets all week long. The week started with tensions still elevated after President Trump warned that the US was prepared to resume military action against Iran if negotiations failed. At the same time, Iran warned it would open new fronts if attacks resumed. That immediately kept traders focused on the Strait of Hormuz, one of the world's key oil shipping routes. Because when there are fears around Hormuz, oil prices react fast. WT crude pushed back above the $100 mark earlier in the week as traders priced in possible supply disruptions and tighter global energy conditions. But then the tone started changing midweek. Reports began circulating that the US and Iran were moving closer toward a draft agreement through Pakistani mediation. Markets reacted immediately. Oil prices pulled back from their highs, equity markets recovered, and safe haven demand for gold and the US dollar softened slightly. The S&P 500 moved back toward record highs as investors started pricing in the possibility of reduced geopolitical risk. Now, looking at the charts, oil remains highly sensitive to every development around the Strait of Hormuz. Even though prices eased later in the week, the market still knows that nearly 20% of global oil flows through that region, so traders are still cautious. Gold, on the other hand, stayed supported overall, as investors balanced improving deal hopes against the risk that negotiations could still collapse, and the US dollar index held relatively firm near the 99 level as markets continued watching Treasury yields and Federal Reserve expectations. But by Thursday and Friday, the market mood shifted again. Iran's supreme leader reportedly insisted that enriched uranium must remain inside Iran, while US officials pushed back strongly against any permanent control or toll system over the Strait of Hormuz. That reminded traders that despite the optimistic headlines, key disagreements still remain, and that's why volatility stayed elevated across oil, currencies, and equities throughout the week. Right now, the market is balancing two competing themes. On the one side, potential diplomacy, easing supply fears, and stronger risk appetite. On the other side, persistent geopolitical uncertainty, energy risks, and the possibility of renewed military escalation. And until there's a confirmed agreement, markets will likely continue reacting headline by headline. So, heading into next week, will diplomacy finally calm markets, or will renewed tensions push oil and safe haven demand higher again? Drop your outlook in the comments below.